It has been one of the most speculated stocks in the Nasdaq over the recent years. Some have said that it might be the next Tesla. Most people believe that it might do well now, but it's eventually going to burst. Regardless, this is one of the most speculated stocks in the stock market in the recent years. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies actually having a product. As time went on, the stock's price action, along with the investors' hype and hopes, went through some huge roller coasters, and some are still wondering if it's time to jump in this bandwagon. In today's video, we will look at Lucid and to see if the company still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. On Monday, the shares of Lucid increased significantly in terms of share price by more than 7% and increased by more than 30% over the past week. Overall, it is one of the best performing EV stocks since it went up by 36% since the beginning of the year. Recently, there was an analyst from Citibank who downgraded Lucid from buy to neutral, but this downgrade had little to no effect following the delivery and the production data being delivered. The announcement of the partnership with Aston Martin also contributed to the upward momentum that Lucid is currently enjoying. With all those changes in mind, it seems like Lucid shares have reversed much of the previous bearishness, ending the phase where the stock was going through a sell-off after the rumors of a potential buyout. We are basically back to square one, and it's up to Lucid to show us whether they can maintain these current gains. Of course, I think that Lucid also has enough potential to face up the challenges ahead, even if it means temporary unrealized losses. Now, let's also take a look at the technicals of Lucid. The trading volume of Lucid Automotive has been around 54 million shares compared to the average volume of also 54 million shares. Over the past 52 weeks, the price fluctuated between $5.46 and $21.78. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market, and if there's enough liquidity to support a trading strategy. If the float is very thin, it would be very easy to influence the stock price, but low liquidity could also mean that the demand is limited as well. When we demand the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For example, if the stock were to break through, the current volume could be significantly higher. So right now, I would say that even though it goes kind of against this rule that I just said, but because the recent volume has already been very high, the fact that it maintained this high level of volumes to begin with kind of suggests that Lucid is on the path to go higher in terms of the stock price. The market cap of Lucid is currently around $13 billion versus an enterprise value of $12 billion. So it's trading at a very fair price as the market is concerned, at a very slight premium thanks to the brand power, the goodwill, and so on. As we compare the current price to the historical price fluctuations, the stock is currently 35% higher than the 1-month low, 35% higher than the 3-month low, and 35% higher than the 52 weeks low. In the options market, which often gives us a hint of the market sentiment about where the stock price is probably going to head next, the implied volatility is 86% versus a historical volatility of 81%. The put-call volume ratio is currently around 0.24, and it is normal for many stocks to also tend to have a higher put volume than what they deserve. Now, at 0.24, this means that most people participating in the options market took the assumption that Lucid is probably going to head higher. Now, just be warned that it's not because people collectively believe this that it makes it absolutely true. In fact, they're very often wrong. However, it still tells us a sort of sentiment in the market at the moment. The most recent volume of options traded is 154,000 contracts a day versus the 30-day average of 146,000. Regarding the open interest, the most recent volume of open interest is 1.1 million contracts versus the 30-day average of 1 million contracts. In terms of the shareholder structure, institutional shareholders own 73% of the current float. Now, this means that there are a lot of institutions who have a lot of faith in the long-term potentials, or at least the mid to long-term potentials of Lucid. So it's always good to see institutional involvement when holding a stock long-term, because it offers a layer of stability and also legitimacy that the market is confident in Lucid and that we should maybe consider it as a stock to ride over the next couple of years instead of just a couple of weeks or months. So the current short interest is around 24% of the total float, 60% of which coming out from the dark pools. This is considered as high since for many stocks, if the short interest is above 15%, there will be an argument to be made regarding the fact that we might be entering into a short squeeze. Lucid is an EV manufacturer that is poised to shake up the industry with the cutting-edge technology and designs. While other EV companies have been making strides in the industry, Lucid Motors stands out with its advanced battery technology, aerodynamic designs, and commitment for sustainable business model. So, in addition to the advanced technology and design, Lucid is also committed to sustainable business model by using the renewable energy sources to power the production facilities and wants to reduce its environmental impact throughout the life cycle of their vehicles. This commitment is what separates the company from other competitors, in my opinion. Another factor that makes Lucid Motors standing out is the focus on luxury segment. The company's first vehicle, Lucid Air, is a vehicle that is spacious and comfortable, coming with advanced drivers, assistance systems, and many other luxury features. When we look at the long-term tendencies of Lucid price action, it's not hard to see that the bubble that gave so much hope to traders around the world is now bursted. The market is no longer willing to blindly follow the latest hype, because on one hand, the market doesn't want to persist on believing that a beautifully made PowerPoint is better than a good financial report. On the other hand, it cannot afford to sustain the trend when supply chain issues, doubt over flagship companies within the sector, conflicts around the world, higher interest rates, and a looming recession have already been plaguing the real economy out there and also the narrative. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for the next couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that has investment value in the years to come. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reasons, they may still last for a very long time and bring the price to very low levels. Hyliion and PaySafe are excellent examples in that case. Lucid had a strong financial performance in 2022. The company reported revenues of about $200 million in Q3 of 2022, a significant increase from just $232,000 of revenue in Q3 of 2021. This strong revenue growth was driven by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. The Lucid Air is a luxury electric vehicle that has been well received by consumers and that has helped establishing the company's reputation as a major player in the sector. Currently, they still have a negative net income, mostly caused by the fixed costs and other operating expenses that should be absorbed once the volume starts to pick up. Overall, Lucid's financial figures paint the picture of a company that is growing its operations but lacks a little bit in discipline and cost control, needing to scale up the operations to start having positive cash flows. Now, let's also cover the shareholder composition in Lucid, because this is a very important factor to determine if the company is better for trading or investing. Lucid is currently held by the institutional buyers for the most part, at more than 70% of the total float. This suggests that the price volatility of Lucid will be lower than other growth stocks, mostly owned by retails. The reason why this might be the case is because institutional shareholders have far more diversified portfolio and can afford to wait, so they don't mind the short-term volatilities. They also tend to stay in for a longer period of time, which is also a good sign for those of us who want to stay for the long run. Some key behavioral differences between institutional and retail shareholders include their investment horizon and also their level of involvement in the corporate governance. In other words, institutional shareholders tend to behave as if they own the company for real, that they are the ones deciding what is going to be the company's decisions, whereas the retailers tend to just behave as speculators. We come in and we aim to make more money than when we first entered in the stock, and this is the end of it. They don't see necessarily like the potentials of the money that there is to make 5 to 10 years from now. Whereas people managing other people's money can sometimes have this kind of opportunity to wait. The short interest of Lucid has been increasing in recent weeks, meaning an increasing number of investors are wondering whether it's a good time to sell the stock. Short sellers borrow the shares from brokers and then they dump it in the market, hoping to buy them back later at a lower price and making the profit from the difference. In the case of Lucid, there is a significant amount of short selling, but in my opinion, it's not sufficiently significant to say that there is a concerted short operation going on against Lucid. So I would say that this has to be put as a secondary reason at most. It's important to note that the short interest may not guarantee a short squeeze, but nevertheless, it's a metric worth monitoring. It's also worth mentioning that people shorting the stock often have a good reason doing so, and that a short squeeze may not happen regardless of how many stars are being aligned. My conclusion is that Lucid shares are going to have an opportunity to prove themselves in the year ahead, and that we're probably going to see more movements up and down. And given that the market has already been very unkind to Lucid in the past year or so, I think that it's probably going to go through another few rounds of hardship, but ultimately it's going to have a place in tomorrow's economy, and that it's showing enough resilience despite all the bearish signs that it can hold up to the ground. So for me, anything that is above $5 or $6 can be a good starting point for more like exposure in Lucid, as long as you still have any room in your allocation. Speaking of the allocation, I would say that 3 to 5% in a portfolio would be a good place to start. And I would also recommend to split the allocation in batches of 10 to 20% of it over the course of like next 6 months, so that you can purchase more in case of retracements.